All right, welcome to The Explainer. Today, we are tearing into Microsoft's latest earnings report. Now, from an analyst's point of view, it's never just about the big numbers they throw out. It's about the story those numbers are trying to tell. So let's get into it and find out what's really going on behind the curtain.
Okay, let's jump right in with the big, flashy number everyone's talking about, nearly $78 billion in revenue for the quarter. I mean, it's a massive figure, but as you'll see, the real story isn't the number itself, it's how they actually got there.
You see, for an analyst, that big number, that's just the appetizer. The main course is the growth rate. An 18% jump year over year for a company this gigantic, that is not easy to do. It tells you that growth isn't just plodding along, it's actually speeding up. This is the kind of thing that makes Wall Street's ears perk up. So here's our game plan for how we're going to break this all down. We'll start with the main narrative, then dive deep into that AI and cloud engine. After that, we'll check on the other parts of the business, uncover the risks that the pros are watching, and then we'll wrap it all up with a look to the future.
So what is the big story this quarter? You know, every earnings report has a central theme, a main takeaway. And for Microsoft this time around, it is absolutely impossible to miss.
The key thing to understand is that this growth didn't just happen by accident. No way. This is the payoff. This is the direct result of Microsoft throwing billions and billions of dollars into a huge, high-stakes bet on artificial intelligence and the cloud. And this quarter is the proof that that bet is starting to seriously pay off.
Okay, so let's get into the weeds now and look at the numbers behind that story. To really understand what happened this quarter, you have to understand what happened in one specific part of the company, intelligent cloud.
Wow, okay. This chart pretty much says it all, doesn't it? I mean, just look at that separation. The other parts of the business are doing fine, growing healthily. But Intelligent Cloud's 28% growth, that is in a completely different galaxy. This is the hyper-growth engine of the entire company right now.
But hold on, it gets even more interesting. Let's drill down even further inside that Intelligent Cloud segment. Because this number, 40%, this is the number that every single analyst on Wall Street was waiting to see. A 40% growth rate for Azure and other cloud services, that tells you that demand for their core AI offerings is just absolutely white-hot.
And this table really puts the sheer scale of this thing into perspective. The whole Microsoft Cloud operation is now a nearly $50 billion business every single quarter. That's just mind-boggling. It's a machine that prints cash, and that cash is what lets them fund all of this crazy, ambitious expansion.
Now, this growth isn't just about their own in-house products. If you dig deep into their SEC filings, and trust me, we did, you find a really fundamental change in their relationship with OpenAI. Look, a 27% stake, that's not just a friendly partnership. That is a deep, deep financial marriage. Their fortunes are now tied together.
And when you see a quote like this, tucked away in an SEC filing of all places, you know it's not just some fluffy PR line. No, this is a direct message to investors, loud and clear, that this OpenAI relationship is absolutely central to their entire strategy for dominating the AI space.
But here's the thing. A great company can't be a one-trick pony, right? Even with all this AI excitement, a smart analyst always has to check under the hood and make sure the other engines are still running smoothly. So let's do that. And this is so important because it's really easy to get lost in all the AI hype. But check out this chart. The good old productivity segment, we're talking Office, Teams, LinkedIn. That is still the biggest slice of the revenue pie. This is the bedrock. It's the stable, profitable foundation that the whole company's built on.
And here, you can really see a tale of two different businesses. On one hand, productivity is just crushing it with fantastic 17% growth. But then you look at the consumer-facing side, and it's a mixed bag. I mean, a 29% drop in Xbox hardware sales? That's jarring. But, and here's the analyst's take, it might actually signal a strategy shift. Maybe they're moving away from low-margin consoles to get people hooked on that high-margin, recurring revenue from Game Pass.
All right, now for my favorite part. This is where we really dig in, read between the lines of the report, and find the stuff that they don't put in the big press release headlines. This is where we look for the pressures and the risks.
And this brings us to the #1 question on every investor's mind. All this AI growth is absolutely fantastic. But what is it costing them? Because, let's be real, building the AI infrastructure for the entire planet is phenomenally expensive. So how's that hitting the bottom line?
And here is your answer, right here in the data. While cloud revenue soared, the gross margin, the actual profitability of that revenue, it went down. And the reason is right there on the next line. The cost to generate that revenue exploded by 43%. That, my friends, is the price of building an AI empire.
And to their credit, they're upfront about it in their filing. They say it plain as day. Margins are getting squeezed because they are spending a fortune to scale up their AI hardware. This creates a classic dilemma for investors. You absolutely love the growth, but you have to be wary of the hit to profitability that comes with it.
But before we get too worried about all that spending, you have to look at this number. To put it all in perspective, Microsoft generated over $45 billion in cash from its operations in this one quarter alone. They have an almost unbelievable ability to self-fund these massive investments without even breaking a sweat.
But there is one other major risk hiding in the fine print. A huge, long-running tax dispute with the IRS is looming large, with a potential liability of nearly $29 billion, and that's before penalties and interest. Now, Microsoft says it's going to fight it, but that is a significant financial cloud hanging over the company that you simply cannot ignore.
Okay, let's put it all together. If you're looking at Microsoft right now, what's the core investment thesis? Well, it really boils down to that classic Wall Street debate, the bull case versus the bear case.
And this slide just lays it out perfectly. The bull case is simple. They are the clear leader in what might be the biggest tech shift in a generation, and they have the cash to win. But the bear case is all about the cost. Margins are under pressure, the consumer hardware business looks weak, and you have these major legal and tax risks lurking in the background.
And that leaves us with the final, multi-billion-dollar question. The growth is undeniable. Microsoft is firing on all cylinders. But as this AI arms race gets even more intense and the costs keep skyrocketing, can Microsoft protect its profitability? The answer to that question is going to define this company's story for years to come.